You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is time to talk about some futures options. Yes, it is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com. Glad to see so many of you folks are just having a ball on the network these days, including the newly launched sister show to TWIFO, the Futures Rundown. Folks are just having a ball with that show. I got to admit, I'm having a ball talking futures these days. I've always been a bit of a futures dabbler, obviously more on the options side of the fence than the futures, but this is slowly but surely luring me to the dark side. And I have to admit, it's a fun journey. Glad to see so many of you are along for the ride. If you have no idea what I'm talking about, make sure you're getting the full network. Listeners, that will get you all of these shows coming on the on-demand side, including the Futures Rundown, which, again, very much the companion show to this one. And, of course, if you want to go above and beyond, you want to get pro Q&As like we have with our friends over there at Fidelity earlier this week, as well as Options Oddities, probably coming up later today, another early episode for you, then only one place to go, theoptionsinsider.com/pro, the place to go to learn more. As we learn who's joining us in the old CME Group Hot Seat, I'm pleased to welcome back our old friend, Mr. Scott Bauer from Prosper Trading Academy. Mr. Scott, welcome back to TWIFO, sir.
Mark, thanks for having me. I'm glad you invited me back.
How are things at Prosper? Are we prospering, sir?
Oh, things are running along magically.
Magically. I like it. All right, let's see if the show runs along magically. Right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we tell you everything lighting it up to the light side over there as well as to the dark side at CME Group this week. If you look at the full 1 week chart that we put out right before the show, listeners are also our friends over there at CME also put it out, so if you follow either of us on socials, you should be able to see it. You'll see the full week's gamut. You'll see we are pretty much 70-30. We are biased to the red, even though the largest percentage mover is to the green. But Scott, you've been on the show once or twice. You know how this works by now. You think you can walk the folks through the light side and the dark side this week, sir?
Yeah, let's try it. Let's give it a whirl. I think I'm okay.
Have at it, sir. The floor is yours.
All right. Do you want to start light side or dark side?
It is up to you, sir. You're in the driver's seat. You go wherever you want.
Know what? Let's go on the light side here. Number 5. What do we have? Platinum. Platinum up almost 2.6%. Number 4 on the light side. Corn. Boy, we don't talk a lot about corn, but corn's up almost 4%. Number 3, soybean, almost up 4% as well. Silver, I mean, boy, it seems like we've talked about silver every week for the last ad infinitum. That's up almost 6%, but the leader in the clubhouse with a large lead, number 1, palladium, up 11.5%.
Nice work, sir. You think you can handle a dark side too?
Let's do it.
All right.
Let's do it. On the dark side, we've got the materials sector down about 3%. The E-mini Russell, okay, which is a big flip-flop from where it was last week. The E-mini Russell down about 3%. Last week, that was actually number 4 on the light side, up 4%. So a lot of volatility in those small caps. The Nikkei down 3.2%. At number 2, Natty Gas, you know, that Widowmaker, Natty Gas down just over 5%. Last week, it was also number 2 on the dark side, down almost 7%. And then on the dark side, leading Class 3 milk, down 5.4%.
Well done, sir. You even started from the bottom. You built suspense going from 5 to 1. I can't tell you how many people I've tossed it to, and they always start at the top. I think it's a human nature thing. They just want to go right for the jugular. And they don't.
No, you got to build up that suspense.
Exactly.
Like
you got to build some suspense. It's part of the whole hosting game. All right. You can rest your voice, sir, while I run through a little bit of the CVOL movers and shakers out here this week. Remember, listeners, you can run this report for yourselves. Just type CME and CVOL into whatever browser you're rocking out there. That'll get you to the dashboard. Make sure you adjust the high-low range to only go back 1 week, and then go into an ordered list, and you'll see exactly what we've got going on right here, listeners. At the top of our list today, we've got the Treasury yield vol. So bumper a day for yield vol. Remember, yield vol, price vol, 2 very different things in the Treasury world. Yield vol, obviously a little bit frothier, a little bit juicier, 158.39 right now, up about 5.4 points just today, and also hanging out at his high level for the week. The low was 133.08. My goodness. 25 handle move in Treasury yield vol this week. Man, that's something to see. Below it, we have FX. How often do we have FX near the top of our list? Well, we have it today, listeners. FX CVOL 926, up 0.44 today. It's a pretty decent move for FX as well. Also pinning the needle for the week. In fact, we have most of our names, with the exception of one, are pinning the needle for the week to the upside, listeners. The low came earlier this week, 8.35. Below it, we have the Treasury price vol, kind of neck and neck with the FX CVOL right now. 9.45 for the Treasury price vol, up 0.45 today as well. Also pinning the needle for the week, the low was 7.51, so nearly a 2-point move in Treasury price vol. Might have to cast a glance over there in Treasury land. Below it, we have metals. Scott was just alluding to how we've been talking about metals a lot lately. It's kind of inescapable. Metals CVOL today, 20.32. Kind of unched today, but also pinning the needle for the week right now. The low, more than 2 points below that, 18.28. So a decent pop in metals vol this week as well. Vol popping this week, listeners. With the exception of one, like I said, there is one lone holdout, and that is the Ags. The Ag CVOL 19.59 today, off 0.17 today. Also pretty much pinning the needle to the downside for the week. The high was 19.89, so not a huge range, about a third of a point on the week, but enough to pin the needle to the downside right now. Then below we have the commodities CVOL, right back up again, 39.39. Off 0.32 today, but pinning the needle, pretty much close to pinning the needle for the day right now. The high was 39.71, the low 36.52, so over a 3-point swing there. At the bottom of our list today, we have the energy CVOL, 62.48, off about 0.6 today. The low was 57.02. The high, a little bit higher than it is right now, 63.07. So quite the range out there. 6 points on energy CVOL as well. So Scott, we kind of have an embarrassment of riches out there. We have Nat Gas doing its Nat Gas thing again this week, off 5.25%, off nearly 7% last week. So Nat Gas once again explosive. I did just glance at the volume, and certainly explosive from a volume perspective. We got the old Russell 2000 taking a tilt to the dark side. We got corn. You're right. We don't talk about corn as much on the show. Corn and soybean oil also popping. Silver, a frequent offender out there as well. And we've also got the treasuries looking a little funky on the vol side. So, Scott, you are our guest. I will allow you to choose where we begin our journey this week, sir. Where do you want to start?
Let's talk about natty gas.
I had a feeling you're going to say that because I have it already up on my screen. All right, to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you know where to go by now. Unless you're new, in which case, welcome. Head on over to cmegroup.com/TWIFO, TWIFO. That will get you lined up with our reports here. If you're new, they may ask you to sign up for an account. It takes about 2 minutes, and then you're good to go. It's all free. That will give you access to our This Week in Futures Options report. Once you're in that report, listeners, go down 3 slots in the asset class drop down to energy, and then 3 more to nat gas, and that's where we will begin our journey this week, listeners. 251 is where that front future is hanging out right now, up about 26 cents just since Monday. Obviously, if we go out, though, to the end of our show last week, we're off about 5.25%. So it's been an intriguing run out there in the world of nat gas of late. We're up, we're threatening the 3 handle, we're back, we're threatening to break through the 2.5 level. We do break through it. Now we're back hanging out around it again. Either way, nat gas explosive, certainly on the volume front, listeners. Nat gas not messing around this week, threatening 1 million contracts right now, 967,000 contracts on the tape. So I think, to put it mildly, nat gas volume is explosive this week. I don't know, Scott. I think I've abused that pun by now, but it's true. It applies. 1 million contracts in nat gas. That is nothing to sneeze at. What is catching your eye out there in the world of nat gas this week, sir?
Yeah, obviously the volume is unbelievable. When you look at this from a technical standpoint, and look where we were a year ago, up at 360, 365, bottom down to 150-ish back in February. We're kind of, sitting near the middle of the range right now. So what I look at is we just had a nice little pop off of the 200-day moving average on huge, as you mentioned, huge volume. So we're not going to stay right here, Mark. When I see a move like this, that top to bottom, and now we're right in the middle of the range, to me, we're ready for another explosive move from here. I don't know if that move is going to be higher or lower, but we are ready for an explosive move. I'm not saying we're getting back to 350. I'm not saying we're headed back down to 150, but with implied volatility where it is now, just on all this volume, to me, it makes sense for someone that wants to trade in natty gas to play what's called a strangle, to look at buying, a call, buying a put out of the money on both sides. Maybe you go out a month or 2 here, because it sure looks like, to me, this thing is going to really make a big move here pretty quickly.
Wow. Nat gas strangles. Interesting.
Which is really counterintuitive to what many natty gas traders would say how they've approached this over time. But the volatility we've seen in here, it's pretty massive.
Yeah, I'm trying to think the last time we've had a lot of people talking about upside a few times, swinging for calls or, verticals or, bullish risk reversals, sometimes a little bit of put action. We don't get a lot of strangle talk on nat gas, which you're right, makes it kind of interesting. Scott, do you have
that's why I wanted to bring this up.
You said about a month, or how far are you going with this?
Yeah, I would go out about a month. I don't want to pay any more than that. So I'd look for, obviously that move to happen pretty quickly.
Yeah, some might say explosive move, listeners, just to beat that to death here. to start the show. Let's get out to what's lighting it up. Like we said, nearly 1 million contracts on the tape. Of that, man, Scott, this is just interesting how everything is so near dated now. Nearly 1 million contracts on the tape. 58%. This is not, we're not talking the E-mini or something like that. We're talking nat gas. 58% of the volume this week going up in the contract that expires in 4 days. Isn't that crazy?
I mean, that's how trading has, kind of moved. Everybody wants that immediate reaction. That's why these, zero DTEs and 1 day expirations, why they have become so incredibly popular. In fact, if you look at that I follow the ES minis, to a T. If you look at volume there, Mark, options that expire within 5 days, okay, account for over 60% of the option volume in the E-minis. So yeah, everybody wants that short dated stuff.
By this logic, your 1 month straddle is like a leap. It's an eternity.
I'm going to get a lot grayer by then.
Who wants to wait a month? 4 days or bust in that gap. Man, what a sea change we've seen in so many products now. It's just fascinating to me. So yeah, listeners, people are looking for nat gas to go somewhere in the next 4 days. They don't want it to sit around here, right around 2.5. So I guess we're going to crunch the vol in a 4 day to go contract. We can go a little bit farther out too. If we go out to the D's contract that has a whopping 32 days to go, that did 21% of the volume, so also pretty active. Probably a little bit more insightful on the vol and skew front. Let's do both really quickly. Let's do the 4 day contract first. The vol out there, nearly a 78, up 16 3/4 points. Again, take vol with a grain of salt when you're going away in 4 days. The skew puts were bid last week, 3.9% bid there. A little bit more bid this week, 4.9% bid. The call is kind of hanging out the same level, 1.6% discounted last week. Actually, I take it back. They have swung. They're now 1.9% bid. So a little bit of a bid in both directions out here, which kind of lines up with what we're seeing just volume-wise. People want it to go. In terms of the D's contract, did about 21% of the volume this week. The vol out there is at about a 70, still frothy, up about 10 points this week. And the skew last week, the puts 4.3% discounted. This week about 4%. So no real evolution on the puts. And in fact, nothing on the calls either. 6.1% bid with the calls last week, 6.6% bid this week. That's the skew we tend to expect, a discount to the puts right now and a bid to the calls. You go out to Jan of next year, obviously nat gas, a very seasonal product. That bid for the calls jumps up to about 12.5%. So you're getting right into the teeth of the winter months, and obviously there's a bid for nat gas calls. And the skew reflects it. Let's see what's going on out there today, and indeed this week, listeners. If you said 2 puts going away in 4 days, that was leading the dance. Well, you would be the winner chicken dinner, listeners. 72,000 of those going up this week. I'm sure if we crunch the numbers, that might even eclipse silver, the entirety of the silver complex, just in those puts. 72,000. The big day was Monday. 34,000 mostly opening. 20,000 on Tuesday. 12,000 on Wednesday. And about 5,000 today against an OI of, get this, 74,000. My goodness. So all that paper pretty much was opening this week. I don't know, Scott, 2 puts with 4 days to go, $0.50 in nat gas to the downside. Obviously, people are going to be overriding these too, but the net bid to that skew, so people are probably net buying these. 2 puts in 4 days? What do you think about those?
I mean, I'm expecting a pretty, quick, explosive move. I don't know about that quick and that explosive. Someone's looking for a big outlier, but you're right. They're probably overriding it against something else. Yeah,
that'd be quite the move in 4 days and to the downside in nat gas.
Yep.
Wow. Okay, but we've seen, I suppose, crazier things. 2022 leaps to mind, but still, yeah. Wow, that's 4 day to go puts, listeners. 72,000. Are you on that train, listeners? Clearly, somebody is, and for size. Behind it, we have the 2 quarter puts, so a little bit more reasonable, roughly half the distance to the goal line of the 2 puts. They traded 50,000 contracts this week. It doesn't look like it lines up for a lot of vertical action either. The big day was Monday, so we could have some overlap there, 18,000 on Monday, but they were opening on the 2 quarter puts as well. So unless you're opening a 2 quarter 2 put spread 1 by 2, doesn't really line up that well. About 10,000 on Tuesday. Looks like folks were closing there. 10,000 on Wednesday. So we could have had some rolls down to the 2 puts, which is a strange choice when we're net up on the weekend. At least we'll net up because it's Monday. And people are bailing on these puts. That's kind of interesting. And 13,000 today against an OI of 42,000. So 2 quarter and 2 puts, a lead in the dance out there this week, listeners. If that's neither of those really suits you, you want to split the uprights, how about a 2.15 puts, 2.15 puts, going up 38,000 times this week. Again, Monday, leading the dance, 15, nearly 16,000. So there could be a little bit of vertical action there between the 15s and the quarters. 10,000 on Wednesday, mostly closing there. Looks like that lines up pretty well with the 2 quarter puts there as well. So maybe somebody bailing on a vertical there on Wednesday. 3,800 on Tuesday, slightly opening, and nearly 10,000 going up today against an OI of 16,000. So folks could be bailing on those today. So just quite the put strip, which again, we are net down on the week. So not entirely surprising. The duration of those puts may be a little bit surprising. 4 days to go. That's a little bit surprising. Let's go a little bit beyond the 4-day contract. Let's go out all the way to December, if you can handle it, listeners. 32 days. That lines up pretty nicely with Scott's time frame for his strangle. So let's see if anybody else is out there really lighting things up out here in nat gas in December. Yeah, it was the 2.5 puts in December going up about 30,000. In fact, they just crossed the 30,000 threshold, 39.35 to be precise. So pretty active on the 2.5 puts in December as well. Again, all week long, looks like folks are mostly closing on these, including 11, nearly 12,000 today against an OI of about 40,000. 6,700 on Wednesday, 6,500 on Tuesday, 5,800 on Monday. That makes sense. It's the at-the-money strike right now, so it makes sense we'd see some fluidity. But folks are bailing on some of these puts, which is kind of interesting. Maybe getting the heck out of Dodge. We also have some, it's like opening paper on the 2 quarter puts. Lines up a little bit, so we might, especially on Monday, we might be seeing some roll downs down to the 2 quarter puts. I could certainly see some action on there. Now, Scott was talking strangles. That means we need to look at some upside, too. Let's see if in that 1 month time frame anything's lining up. How about the 3.5 calls? That would certainly be a move. 3.5s doing about 19,000 contracts this week. The big day was 7,600 on Wednesday, about 5,000 on Tuesday, closing there, 3,500 today against an OI of 23,000. So still some size open on that strike, and 2,600 on Monday. I don't know, Scott. 2.5, 3.5 strangles, that floats your boat, or is that a little bit too funky on the upside for you, sir?
Yeah, I mean that's pretty far. I was looking more like 3.25 maybe on the upside, and honestly like 2.25 max on the downside. You get a move down to 2 and 3.5 here. That one may go down in the record books.
Yeah, folks are clearly looking for some action out here in nat gas. So we have our put strip as usual going up here, listeners. The 2 put strip this week. About going up 2,952 times from April all the way out to, looks like, October of next year. So a lot of fun. We got some 4 calls going up. These are in January, listeners. So you know how I said there's a bid here in January and February in the skew. Looks like we got some 4 calls going up this week. 13,600 times in January. Again, that Jan future is hanging out at 3.25. So 4, not quite as far out the money as it might sound. 5,700 today against an OI of 23,000, 5,000 on Wednesday, 1,700 on Monday, and Tuesday about 1,100. So folks, looks like piling into some 4 calls to the upside, which again, given where the future is and the skew out there, perhaps not as outlandish as it might sound. Man, nat gas, once again, kicking us off here on the show. But again, it's inescapable. 1 million contracts on the tape, just volume for days out here. But Scott, we do have an embarrassment of riches out here. We got silver, we got soybean oil, we got corn, we've got your old pal, Class 3 milk. Everybody loves it. We've got the E-mini Russell. We've also got treasuries active on the vol side. What's catching your eye next, sir?
Yeah, so 2 of those. Obviously, treasury volatility is unbelievable, and there's a big story behind that. And then what I have seen recently at CME, and they're breaking records here for option volume, is in the E-mini Russell and the E-mini Nasdaq. We always talk about the ES, the E-mini S&P, but the E-mini Nasdaq, E-mini Russell options, they are exploding. And especially in the small cap, in the Russell space here, with that volatility we were talking about, I think we talked about that at the top of the show, light side, dark side. Last week was the light side. This week on the dark side, there's been a lot of volatility. So we could talk about the Russell. We could talk about the volatility that is in the Treasury space, which is unbelievable right now. And, it's this term premium that is causing a lot of this volatility. And, we have just seen the move in the 10-year and the 2-year. I mean, just really volatile moves over the last several weeks.
All right, listen, I think we'll kick it off next then in our old pal, The Rut.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, to the equities we go. Pop out of energy. Only go down one slot. It is an alpha order list, after all, in the asset class. To equity indexes, and you're going to go to U.S. Index E-mini in the product family. Under product, going to go down 3 slots to the Russell 2000. If you've been listening to the show for a long time, you know what Scott's saying is empirically true. We used to talk about Russell 2000, and we'd be excited if it did 10, maybe 12,000 contracts in a week. These days, doing a lot more than that, 50,000 on the tape right now. So quite a banger period. As you mentioned, the Rut coming under some pressure out there right now, off 3.13% since our last show, which is, of course, the exact opposite of what it did the week before, when it was up about 4%. So they giveth and they taketh away out there in small caps, off about 2.88% as we're kicking off the show here today. So, Scott, you're right. The S&P E-mini kind of steals all the thunder in the room, but the Rut's been an intriguing story of late. So what's been catching your eye out there, sir?
Yeah, really just the volatility and all the talk out there about small caps that they're, maybe going to lead the way here on the next move here. But yet we've seen that back and forth and that back and forth. And we're seeing volatility in the Russell just continue to remain really, really elevated. The contract volume that we're seeing out there, they had a single day volume record just a short while ago, 54,000 contracts. And like you said, we would in the past be talking about this if there was 10,000 contracts in a day. So the view of retail, which is great right now, is that, boy, there's a lot of interest in these small caps here. And looking at some of the Rut contracts, and you don't normally see a ton, but we're starting to see a lot pile up on the tape.
They are starting to pile up indeed. Let's see what's piling up out here this week. And Scott, the other thing I find refreshing about Russell 2000 options is that we were just joking about Nat Gas putting up 58% of his contracts and the expiry that's going out in 4 days. The Rut kind of plays a little bit to the beat of its own drum. Usually most of the volume is going to be 30 days or longer, at least for some of the big trades we're going to profile here on the show. And that is the case again this week. Like we said, about 50,000 contracts on the tape right now. 20% of that going up in the D's contract has about 56 days to go. So we're going to hang out there. Listen, a refreshing distance, nearly 2 months. You don't get to talk about that too often in the equities. The vol in December, you might be asking, what is it? It's about a 23 even, up about a full point this week. And skew-wise, you know what the equities are. The puts are going to be bid. The calls are going to be offered. Now, in Russell 2000, that can change. We have seen it earlier this year when Russell 2000 was hot, looking explosive to the upside. The calls did catch a bid for a little while there, which you will almost never see in the Nasdaq or in the larger indexes like the E-mini. It's just an aberrant phenomenon. But in the Russell 2000, it can happen, and it did happen earlier this year. So the skew in the Russell 2000, a little bit more fluid, and as a result, a little bit more interesting here on the show. The puts last week, 9% bid. This week, 8.3% bid. So still juicy, but not quite as juicy as they have been. And the calls last week, 5.7% cheap. This week, 3.6% cheap. So the calls coming in a little bit as well, which is kind of interesting. And in terms of action out here this week, like we said, it was longer term, nearly 60-day to go calls. In particular, it's like a vertical dominating the tape. It was the D's. Well, D's 2400s are taking it this week with about 2400 appropriate enough contracts going up. Right behind it, we have the 25 halves going up about 2100 times. Looks like they went up in a big vertical on Monday, 1800 by about 1600. And looks like there was closing. So somebody was bailing on a 2400, 24 half D's vertical on Monday. I guess, Scott, they decided to get the heck out of Dodge with whatever they had left on that upside vertical. Because like I said, right now, the rut coming in to start the show is at 22 and a quarter. 2400, Scott. Now, obviously, December is a long time. Anything could happen. But at least for this customer, I guess it sounded like it was a bit of a bridge too far, sir.
Yeah, it kind of looks like that. But, as you talked about, the skew is typically, pretty in line. Volatility is pretty fluid. And, if we look at any of the vol skews going out in time, the end of month for October only a week away, it's slightly under 20%, but then you get to November a month out and we're like 28, 29. Obviously there's a little premium in there for the election for sure, but then that remains pretty constant going out through December, which is like 26. And so you don't see a huge disparity like in, some of the other contracts that we look at.
I have no idea what would be bidding up vol in November, so I'll have to go dig into my models and see what is causing that blip there, because I have no idea.
Yeah, you have to look nice and deep there.
Dig very hard on that one. Are a lot of your clients coming to you over there at Prosper these days and intrigued by the rut? They want to learn more. What are they up to in rut right now?
They definitely like looking at the small caps, whether it's in rut, in the E-minis, maybe in IWM, which is, for those in the equity space, they're looking at an ETF, which is kind of comparable to what SPY is to the SPX, so IWM. But, it is a lot of rage. I get a lot of questions. We have a lot of conversations about, okay, small caps the way to go. You look at the bigger picture, S&P, where a good portion of those earnings come from overseas. And the rut is really concentrated here stateside. So, depending on the outcome of the election, maybe we get a big move here, but it is something that is front and center in the news.
If you want some more near-dated flow, listeners, we got some for you, including today, expiring in a few seconds. We have the 2180 puts have been pretty active all week long, including about 500 going up yesterday. We're at about 22 and a quarter, so close to 50 handles out of the money, listeners. If past is prologue, they're probably selling these, so in which case they're probably okay letting these go out worthless, but that does seem to be the case in a lot of these indices. People like to pick up their nickels ahead of the steamroller. Same thing going out a whopping 1 day, listeners. The 2175 puts have done nearly 1,000 contracts this week. Again, these are expiring tomorrow, listeners. And again, pretty active all week long. 300 and change on Monday, 200 and change yesterday, or on Tuesday, 400 on Wednesday. Nothing today. So again, kind of letting all their powder stay dry today, which if you were long these, maybe you'd be scrambling to do something with them. So it does seem like folks are blasting away at puts. Not quite as insane as they do in the E-mini. They sell such nonsense garbage puts out there. You could spend a whole show just talking about that. So there is some near-dated flow out here in the Russell 2000, but like we said, the larger trades do seem to be aggregated a little bit longer term, unless you're really excited about 1,000 of the 2,200 puts that go away in about 8 days. They traded a lot this week. Most of them, actually almost all of those 1,000 going up on Monday, mostly opening. Could have been a vertical, 22 half, 2,200 traded similar size that day, so it could have been a bit of a put vertical out there, in which case you're splitting the uprights. You're at 22 and a quarter right now, so intriguing stuff out there. But speaking of intriguing, Scott mentioned just how insane Treasury vol is right now. I think we have to head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, welcome to the world of rates. Get into that drop down, pop out of equity indexes, go down 2 slots to interest rates. Product family, we're going to go to U.S. rates. And then product, we're going to go all the way down. Looks like about 6 slots or so to the 10-year. That seems to be the point on the curve where most of you like to play. But that said, maybe we'll start there, Scott. When you're talking rates and when you're looking at rates, what is your product du jour? What do you and most of your clients like to look at and trade in the Treasury? You going 10-year? You going 2-year? You going crazy far 30-year? Where do you like to hang out?
So we definitely like to look at the 10-year as the benchmark, but what we really trade, because it's so liquid, is the 20-year. And there's an ETF for the 20-year called TLT. So we're really, we're really looking a little bit longer term, but you get some really sizable moves. Even though 10-year is really the benchmark, you get some really, really sizable moves. And with the volatility that we've seen across Treasury markets recently, we're seeing big moves intraday even. Just look at the 10-year today after topping 425. Now we're below 420. So that's a huge move. You talk, a year ago, 2 years ago, go back in time to even get a move of, intraday of 5 basis points. That was like almost unheard of. So love the volatility action that's out there.
Yeah, we kind of alluded to it at the top of the show where the yield vol just making ridiculous moves. Let's see, what was it exactly? It was at 158 and a third, up 5.4 points just today. And on the week, it's had about a 25-point range, 133 to the dark side, listeners, and 158 to the upside. So fully 25 points. Now, again, that's not the price vol, but the price vol is also looking pretty frothy as well, up about nearly 9.5. I'm hard-pressed to think the last time we had the Treasury CVOL getting up to these levels. Treasury vol likes to hang out, 7.5, maybe a 6. Not really the most volatile complex on the planet. So we're starting to get a little bit frothy, Scott. What do you and your mentees think about this vol we're seeing out there, and how do you guys like to play it?
It's hard to sell vol in the Treasuries because there's typically just not that much premium even when vol gets higher. So it's hard to sell it. And we're usually looking at straight directional spreads, whether it's upside call spread, downside put spread. Right now we are long in TLT. What does that mean? We're looking for rates to come down, bond prices, Treasury prices to go up, yields to come down. So that's pretty much what we're looking at right now.
I tried pulling up your beloved 20-year for you, Scott. Not a big options player out there on the 20-year part of the curve. We can talk the futures. Maybe next time you're on the futures rundown, we can get into some of the 20-year futures. So we're going to hang out in the 10-year. Is that okay with you, sir?
Absolutely.
All right, to the 10-year we go, listeners. 10-year, you might have heard, puts up some paper. 4 million contracts on the tape right now. Listen, that isn't even the most explosive week we've seen out here. It's just a fairly standard week, all things considered, out here in the 10-year from a volume perspective. So over 4 million contracts. Unlike what we were saying with nat gas, I mean, there is near-dated paper. Actually, 36% of the contract, 36% of the volume, I should say, going up in the contract. That goes out in one day. So there is near-dated paper up here in the 10-year, which might sound counterintuitive to a lot of you, but that is the case. But the dominant trade, the size trade out here this week actually goes out to December, 29 days, where we saw 190,000 of the 110 half puts. Yes, 190,000. Again, to put in context, we had the most active trade in nat gas, which was pretty explosive this week, and nearly 1 million contracts on the tape. That was about 75,000. We just talked about the entire complex did about 50,000 contracts. And now we're talking 190,000 in just these 110.5 puts in December. By the way, what is the vol in the D's 10-year? 8.1, up about 2/3 of a point this week. So again, vol getting a little bit frothy out here in the Treasury. You start to see north of 7.5, dare I say it. That's actually fairly elevated for the Treasury complex. Skew-wise, the puts 3.2% bid last week, 3.9% bid this week. So puts starting to tick up a wee bit, and the calls 1% cheap last week, 4.4% cheap this week. Got a little bit of a modest equity skew percolating in here in the D's 10-year, which is also interesting. But the big dog out here, like we said, the 110.5 puts, 190,000 of these bad boys going up. And this is the other thing I love about the Treasury complex. It's kind of a binary complex in that you have products that just do ridiculous amount of volume one day and then not much the next. That's kind of the case with these 110.5 puts. 134,000 going up on Tuesday alone. Today, 13,000. A little bit more on Monday, 19,000, and about 23,000 on Wednesday. But again, that just seismic explosion of paper on Tuesday, 134,000. So again, a total of 190,000. The OI is 84,000. So we had a little bit of back and forth action, obviously, on this strike. Looks like they were closing predominantly on Wednesday out there. And then behind it, we have 140,000 for number 2. Actually, take it back. The 111 puts going out tomorrow were number 2 at 169,000. So again, if you want near dated flow, there it is for you, listeners. In the 10-year, 169,000 of the 111 puts expiring tomorrow. So if you want them, get going quick. Looks like folks were bailing on these all week long. 43,000 to, and this is a kind of a weird one where it's kind of the opposite of what you normally see, which is steady volume all week long. Usually it's very staccato. It's a burst of volume, then it's kind of quiet, then maybe another burst of volume. This one has been doing 43,000 across the board. Today, yesterday, and Wednesday, all 43,000, all folks closing out there. 38,000 on Monday also closing. And guess what? The OI on the strike coming into today, 44,000. So I have a feeling they were closing today as well. So eerily similar paper. Right after I point out how staccato this product is, someone coming in and just doing the exact same thing every day this week, and the 111 puts expiring tomorrow. That's why these products are fascinating here. And let's do a little 111 halves, also pretty active this week, also going out tomorrow. 143,000 of those bad boys as well. I mean, we've already talked about, my goodness, we've already talked about nearly 500,000 contracts just in 3 options, listeners. It's a whirlwind of paper. 69,000 on Monday, so a little bit more mixed here. Mostly opening there. 36,000 today against an OI of 47,000. 27,000 on Tuesday, mostly closing there, and about 10,000 on Wednesday. So a little bit more what we would expect in the Treasury complex, which is a big burst of paper on one day, then kind of a little more quiet the other sessions. Scott, we could spend the rest of this show just talking about how much paper is going up in the 10-year. Anything else catching your eye out here in terms of the 10-year and the rates complex, sir?
Really just that volatility and what's going to happen to it. You know, if you go back in time and look to see, you know, if you look at CVOL and see where this volatility has been and how quickly it has come down, it's not like on the equity side where you get something really volatile, you know, ahead of an event, whether it's ahead of earnings, ahead of a Fed decision, whatever it is, and then you see that vol contract really quickly. You typically don't see it contract or normalize, you know, revert back to its mean as quickly as you do in the equity space. So I'm not going to say that this Treasury volatility is going to remain at these levels here, but I would not expect it to really pull back much, certainly before the election. And then even, you know, with 2 Fed meetings still, November and December, I think we remain up at pretty close to these lofty levels.
And you know, we have lofty expectations for you folks, listeners. Let's see if you meet them. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your segment. Obviously, the whole show is your show, but you folks get to take the reins here on Futures Options Feedback. I had a fun conversation about the nuances of settlement last week. You folks, I love it when you just bring the heat with some esoteric questions. That's the fun part. It's all fun, but that stuff's always fun as well. Let's get some of your thoughts now. Have a little bit of fun on some of the questions of the day, indeed our questions of the week right now, listeners. You may have heard, maybe, just maybe, their election is looming. If you haven't, maybe you should check your newsfeed. So we gave you a fun choice this week. We said if you had to buy one straddle and you got to hold it through the election, which one did you choose? Now, we put SPY in here, but you can easily substitute the E-mini at the same level here. He gave you 3 choices and the infamous other, including an infamous first one, DJT, the November 8th 31 straddle. It was trading $17.80 when we posted this on Monday, listeners. So again, more than 50% of the value of that stock being priced into that straddle just through the election. So shows you how much of the value in that stock is tied up in all things political. Well removed from the fundamental or technical camp. Then we have SPY. We chose, in this case, the expiration coming off right after the election, the November 8th, 582 SPY straddle for $17. Again, you could substitute the E-mini for pretty much the same level there. Or let's go straight vol. Let's go VIX. We went a little bit farther out with VIX. We went to the November 13th expiration. Listeners, remember, VIX expires on Wednesdays, and we thought we'd give you a little bit more than just your contract pretty much settling on Wednesday morning. It really goes out on Tuesday evening, which is when all the stuff's happening, of course. So we gave you a little bit more room for VIX to run, in this case, all the way out to November 13th. The 19 straddle for $4.16. Scott, gun to your head. If you had to buy one of these and hold them through the election, what's your pick? Or maybe you have an other you'd like to substitute instead, sir. Have at it.
Oh, that is a real tough one because I'd be a seller of one of those if I can go that route.
I have a feeling I know which one you might sell, but
I think in DJT it's absolutely ridiculous, and I would absolutely be a seller of that straddle. That 31 straddle that was priced earlier, the at the money is now 35 or so. It's about the same price. It's about $18 or so. Certainly I would pick up some wings against that, but to me, that is like one of the richest prices, priciest, whether you look at equities or futures, of anything that is out there right now. That is lighting up my board. So that would be the one just for short-term play over the next, let's call it 2 weeks.
No, it's funny. We both say that. We both laugh at those levels. But then again, it's a binary play, right? It's going to be 0 or 100 after the election. So
it could be.
It's being priced that way. Certainly being priced that way. Let's see what our audience has to say, Scott. They are the ultimate arbiters at the end of the day. And right now, it's a pretty even fight, but it does seem like the E-mini or the SPY straddle is winning it right now. The 17 straddle, the 582 straddle for $17, expiring on the 8th. 37% of you going that way. It was funny. Early on, the DJT straddle was actually winning, Scott. It's down now to number 2, 29.6. I think a lot of people just couldn't stomach that price. That is a lofty price. And then VIX, no love for VIX, Scott. 22.2%. They want to pay about a little over $4 for the 19 straddle. They get a whole extra week, too, in case something crazy happens after the election, right? You want to have a little bit extra time. And then other coming in 11.1%. We've had some fun write-ins out there. Speaking of election fun, and then we'll get out of here on this one. We had last week on our option block show, we had one of our co-hosts there, Mr. Uncle Mike. He was postulating, again, going back to the notion of keeping VIX a little bit longer than just immediately after the election. He was postulating, do you think we'll have a post-election surprise? And I thought that was kind of crazy. But the more I thought about it, I thought, well, maybe we have had things in the past that could certainly be put into that category. So we put it out to you folks. Again, at the end of the day, do you think we'll see a post-election surprise? We said yes, no, or what the hell is that? I thought what the hell is that might win. But no, 52.6% said no. 31.6% said yes. And then 15.8%, you're with me saying, what the heck is that? All right, Scott, we had a lot of fun. We did a lot of living. Oh, we didn't get to ags.
Oh, what a shame.
We got so caught up. I got so caught up in everything, Scott. I know you want to talk your beloved soybean oil. Maybe next time, sir.
Yeah, we'll hold that for next time. I agree with you.
Soybean oil, maybe some class 3 milk, get a little dairy in there. I know you love your livestock. You can't shut you up about the livestock.
You know me too well, Mark.
In the meantime, sir, if folks want to reach out to you to discuss these wild markets, maybe some treasury vol, maybe some small caps, where should they go? What should they do?
prospertrading.com. You can also always find us there, and that'll take you direct to me, direct to my team, and we'd love to talk to you.
There you go, prospertrading.com, the place to go to kick the tires and light the fires. And while you're kicking the tires on online outlets, make sure you head on over to cmegroup.com/TWIFO. That's where you can register for our free reports. They're awesome. I do say so myself. And they're running all the time, 24/7. So if you want to go check Scott's favorite class 3 milk at 3 a.m. on a Sunday, you could do it. The reports are there for you, live and updated all the time. So have at it. It's one of the best free resources you're going to get your hands on out there, especially the skew. If you just come to it just for the skew alone, the quick skew and the evolution in it, you've gotten your value's worth and tenfold more. So cmegroup.com/TWIFO, the place to go to learn more. That's going to do it for us on the network today. Back again tomorrow with a little bit of vol action. Who's going to be joining us on the Volatility View show? We'll got to tune in to find out. Should be a fun one. We'll also get Mr. Dr. Vix's rundown, his recap of all the action from last week's RMC. Should be fascinating stuff. Russell goes pretty deep, pretty hard on that stuff, so it should be pretty fun. Then we're back again on Monday for the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.